In this morning's video, I'm going to just caution traders here. I've mentioned this many times in the past that these intermediate cycles, they tend to, well, the banks tend to manufacture an exit for themselves. By doing that, what they do is they push price above uh, a breakout point. So to emotional gold bugs, it looks like we've got a breakout, and so they start buying. Um, Typically, what happens is the traders sit on the sidelines the whole way up. And in my last video, I noted that this has not been an easy move in the mining stocks to hold on to. It's just been very volatile. Big corrections along the way. Um, Big move here. Bearish engulfing candle. Just very difficult to hold on to this for the full ride up. Not an easy intermediate cycle to make money. I think the next intermediate cycle will get easier, but this is a warning sign here. We've got a breakout above this peak. Um, you would kind of think that maybe price would come up and tag this level and pull back and then take another run at it. But the fact that it just broke through it on the first try is suspicious to me. It looks like what typically happens at these tops where the banks they manufacture this look they paint the chart, so to speak. So they create this breakout. Um, Everybody gets bullish, and retail traders, gold bugs, they all start buying, and that gives the banks the liquidity they need to sell their positions at the very top. And then without the institutional buyers in the market, the price doesn't have any support, so you quickly give back that breakout. So this is a warning sign here that we may have just seen a manufactured top in the metals and in the mining stocks um, specifically. So wouldn't be a bad idea to take some profits, tighten up stops, definitely get off leverage. um, this just looks like maybe the banks are trying to, pull one of their tricks that they use to exit at the top of an intermediate cycle. And let's face it, this intermediate cycle's pretty long in the tooth. Gold bottom back here in August, so it's like 7 months in gold and only 1 month left in the mining stocks. That's a pretty mature intermediate cycle. Um, so anyway, take it for what it's worth. Potential top may have been constructed here, and the banks may have left the party. And if they have, then we may be in store for an intermediate or daily and maybe an intermediate degree decline. And at some point, gold needs to form the handle to that cup pattern. So let me switch over to the gold chart. All right, so this looks to me like we're forming a nice rounded cup, and at some point you need to have the handle. It would be nice if it would come all the way up and fully test these highs, but it may not. It may have started here. So again, like I said, no need to be too greedy here. It's been a very long intermediate cycle. This is very mature. Potential warning sign in the mining stocks chart, mining ETF chart, that has a potential warning sign that we may have just seen the banks manufacture a top. So I would be very cautious right here. I would definitely tighten up stops. And as I said in my last video, if we go below this pivot right here, that would be a lower low, and that would be almost a surefire sign that the sector is rolling over into an intermediate decline, and which would mean that the handle would be forming on the gold chart. All right, so at the very least, I would tighten your stops up, and if gold or miners drop below this point right here, I think you want to get out and get on the sidelines. And I do think the next intermediate cycle is going to be much easier to make money off of than this one. In hindsight, this looks like it should have been easy to make money, but the reality is that in real time, day to day, the volatility was just so large, especially in the mining stocks, that it was anything but easy to make money. It was very, very difficult to hold on to positions during this intermediate cycle. And I think the next one will be much easier.